This is Stock Day. News and interviews from the microcap world. Public information on the OTC, pink sheets, and microcap stocks from around the world. With your host, Everett Jolly.
On today's show, we have a very exciting guest. First time Uptick Newswire Stock of the Day have three very important people on the show today. Leading the way, that is Jason Castenir. He is the CEO of First Colombia Gold Corp under the ticker symbol FCGD. Jason, welcome to the show.
Oh, thanks for having me and our team here. It's a pleasure, Everett.
Would you be so kind to introduce us to your team, and then we'll get into the particulars of what's going on with First Colombia Gold?
Yes, absolutely. So I have the chairman and founder of Singa Energy Solutions, Alexander Misir, on the phone with us. He's actually in the Thailand office currently, so he's joining us from Thailand. And then Ray Kolynchuk, who is the new VP of Business Development, and he's on the line with us as well. And so we're very excited to talk with you and tell you some of the exciting things that are happening around the company.
Gentlemen, welcome to the show. I appreciate you taking time out of your day and coming on the show.
Thank you very much.
Yeah, thank you. I wanted to talk to Jason about, I know there's been a lot of recent acquisition about Singa Energy, and I wanted you to tell our listeners a little bit about what kind of impact this is going to have on First Colombia Gold Corp.
Yeah, I mean, we have been really in the acquisition market for a couple of years now. It started with the acquisition of the oil and gas wells there in Kentucky. And then, sort of as that market began to really soften, really started to recreate ourselves and create the long-term vision. We made some acquisitions in the commercial fuel terminal space that are actually going very, very well. And but we just kind of hit a wall where we had access to product and we had local markets where we were moving some product, but we really just could not create the type of sales figures we needed to feel like we were really creating the revenue numbers we wanted. And the solution we ended up coming up with that was to find us a joint venture partner. And we ended up having, really just the good fortune of being introduced to Singa Energy. And so in the fall of last year, we created our formalized relationship joint venture. And really at that point, Singa was just operating as sort of the marketing arm for these various products we had at our own commercial fuel terminals, as well as rack products we had in various, commercial fuel racks around the country. And so Singa came on, and I'm telling you, if our expectations were high, they so far exceeded them. I mean, I couldn't have even had any vision of what they would do, but they brought in a sales force. They brought in, staffing and personnel, sales support, and the leadership that they brought to the table. Beyond just personnel to do, selling activities, but the leadership and the insight. I was just blown away. And so Alex, who's on the phone with us here, was kind enough to really, show us opportunities that we did not recognize existed or fit into our scope. And so it was a blessing. And so really this acquisition of Singa and our efforts to work here together, it's really the result of the success we've had inside that joint venture relationship. And so that's really what it began, the relationship, and where it's gone from there.
Before we go any further, I just want to disclose I do personally own 7 million shares of First Colombia Gold Corp. Alex, tell us a little bit about, from the side of management perspective, this sounds like this is going to be a very demanding and a huge endeavor to take on some of the things that Jason has created with First Colombia Gold. Where does your leadership place in all this, and how are you guys going to execute this plan?
Well, based on what Jason had mentioned there before, I think So far, since our working together over the last few months, we have an excellent relationship as far as management goes. As a result of the merger, Singa Energy Solutions and First Colombia Gold is like a new tree with two roots, as one would call it. We both have our own histories and two different management culture, and both companies, we operate with pride. And I'm sure combining those efforts together with what we have already in success from both ends, it will not be a very difficult task to move us forward. Management, we have certainly on Singa's end, we have myself, who have tremendous amount of international exposure, most of it with government entities dealing with power plants. Ms. Arapan as well have also the same experience that is there. We have staff that is very, very much in tune with large procurement of fuel and logistics worldwide, not just in the U.S. market. So management, I think most of it is in place, and it's working together as a team, which we have already started to do so, and it's going very smoothly.
Let me ask you this, Alex, while I have you on the phone. I know very little about Singa Energy Solutions. I take it you guys are a privately held company. Can you tell us what kind of revenues you had in 2015?
Singa Energy Solutions is a privately held company in Thailand. We are in the process of doing a power plant facility in Turkey. We signed an MOU with the government in Turkey back in 2013 for a 5,000 megawatt power plant. We're currently doing our feasibility study in that project, and because of the current political situation in Turkey, we have decided to put that project on hold in the interim. And we have been focusing on other projects worldwide, such as in Kenya, India, Sri Lanka, more so on the solar energy sectors. All the projects that we're going into all will be backed by government PPAs and so forth. As far as the companies' revenues go, we are now in the development stage. It's been a new company that I started off in 2013, 2012, and but came from an oil company that we had. It was called ASEAN Commodities Exchange. That was in the export of coal from Indonesia. So revenues is kind of uncertain to answer that as far as for Singa to go, as we are in the development stage of a lot of these projects that are signed.
I see. Jason, I just got an email from one of our listeners, and he actually had a great question. He just wanted to know where we were at in the transition or transaction of the, I think it was 11 or 13 7-Eleven stores. Is that still on course?
Yeah, it's very much still on course. We ran into one of the issues is we've been able to negotiate within that transaction the ability to finance with the owner holding back the paper, not just the actual facilities, but also the inventory. And so we've had to do, some creative working within them. Also on the rebranding. Right now, these are major branded functioning convenience store gas stations. And so on the rebranding side, so we've been able to put together, in fact, we put together the last piece of equity that we needed to finalize this deal within the last 5 days. So now we're back into the place where we're going to redo the inventories at each of those locations and reschedule the actual closing. So that is very much happening. The deal where we're acquiring Singa and doing this merger isn't as much focused in on one component, but across a broad focus. So if I had to say, our goal back when we realized that oil was not going to be $103 anymore, and we were doing very well moving oil and gas, but when it went from 103 down into the 80s, down into the 70s, I mean, it became very clear that this was going to be a new market. Of course, now it's sitting below 40. So when we look at these, dynamics, we knew we had to retool ourselves. And one of the companies we really looked towards was a company called Western Refinery. And Western Refining is a publicly traded entity. And, they were at one time in the 40s and dropped all the way back into the $4 range because they were primarily just a refiner of fuels.
Exactly.
Not a lot of profit margin, a lot of challenges. They retooled their entire organization, and they ended up buying commercial fuel terminals to distribute their own refined product commercially, more or less on the wholesale market. And then now they have over 400 convenience store gas stations that they actually retail that product to. And they basically control the entire supply chain, and now their stock is back into the 40s, and they're a very healthy, strong company. What we decided we wanted to do was reverse engineer that process. So we started with the convenience store concept and got there, and we've got those under contract. We also have a couple other locations of car washes, convenience stores in the Georgia area that we're currently under contract and are taking over operations on. And then we have closed on the commercial fuel facility and currently operating in North Carolina. So what we're working to do is to begin to develop, that process reverse engineered so that we could create something that really would be, as special as that, but is also stable and solid, is the story that Western Refinery has adopted. The challenge is when you go into a new market and you try to create a footprint, be it on a convenience store, which has got, really tight margins, or be it inside a commercial fuel terminal that has really tight margins. The challenge is, can you pick up the customer base? Can you pick up market share? And to be quite honest, we had some strategies. We went into some of these locations and felt like we should be able to do this quickly, and we were unsuccessful.
And when do you think these revenues are going to fall into your balance sheet?
I think that we are actively delivering product on a regular basis every single week right now. And I would say that the vast majority, 90% of that, is coming from the joint venture with Singa Energy. So you'll see that the first quarter of what will be filed in 2016, this first quarter, those revenues reflected on the balance sheet. I think our best week, we did over $50,000 in revenue in 1 week, which was extraordinary. And, we're basically just kind of building up these clients that have come forward and continuing to develop and strengthen what we can do for them, the value we can add, and then the products that we can source them and deliver to them. So there definitely will be reflected in the first quarter of 2016.
I see.
In addition to that, we look towards Singa and realize that if we really, and our vision, and we were serious about this, wanted to be true energy producers, which is why we bought those oil wells in Kentucky to begin with. If we really, really wanted to do that, we had an opportunity in front of us with Singa to not just, produce oil and gas, but to actually produce power. And the biggest reason, because we could have continued to do this joint venture, and there has been no relationship we've ever papered up that's been more successful or more beneficial. But if we really wanted to do that, creating an opportunity for us to merge with them and, participate in these international power plant deals and, to take some of the contracts and products that we have domestically and begin to put them into international and a global marketplace. These were the opportunities that Singa was giving to us. And so it was not so much of a thing where we said, hey, Singa's revenues are in a situation where we want to just go and, acquire them because we want that to reflect on our balance sheet. No, we felt like the talent, the network, the database that they had, the, global, exposure would create an opportunity that together we would grow a revenue that's out of this world.
I see.
So there's, 3 or 4 of those, opportunities that are ready to go, that are, in the final stages of contracts that we now get to be a part of because of this merger.
Okay. Jason, some of the questions that you've answered today has really brought light to First Colombia Gold that needed to be brought light to. My guest today is Jason Castenir. He is the CEO of First Colombia Gold Corp, trading on the OTC under the ticker symbol FCGD. Now, question I have for Ray is, from a revenue and growth perspective, where do you foresee occurring going forward the next 3 to 5 years time frame with this joint venture?
Well, the strategy is to build diversification to our revenues, and that provides us a comfort level in terms of the geopolitical risks that are prevalent right across the globe. We will have strong revenue growth in the U.S. market, building upon our existing business and some other items that we have within our pipeline. But more importantly, we see tremendous growth in the Asian countries, which represent over 600 million people and an expected doubling of their middle class over the next 10 years. There's need for infrastructure, but more importantly, and where Singa delivers, is on the energy project side. So growth in terms of renewable energy projects, thermal energy projects, and that's matching the appetite in terms of the population for more demand. And in terms of going forward, we think the prospects are very positive. So your question back in terms of revenues, infrastructure projects in terms of what we expect over the next 5-year period, we see a very steady growth on a step basis in terms of the Asian marketplace, and we see more modest growth out of the U.S. market. Again, combined, we see any type of risks that may enter the equation to be offset in terms of the exposure we have across both of those marketplaces.
Great. My guest today is Jason Castenir. He is the CEO of First Colombia Gold Corp, ticker symbol FCGD. In closing here, Jason, is there anything you briefly want to talk about that we haven't went over that you would like to get out to the listeners?
Well, I just think that when you look at the news wires, you see snippets of a plan that I think at times can appear fractured. At times, may be hard to get the full effect of what it is we're building. But there is definitely a master plan in place. And when we were able to finalize this deal with Singa and merge these two entities, not only did we gain access to the global markets, not only did we get an opportunity to be an actual power producer, but we also got a leadership team that is second to none. And Mr. Ray Kolynchuk, who's on the line with us now, Alexander, these guys are titans in the industry. And, I've seen a lot of successful projects underachieve because the leadership wasn't there.
Absolutely.
And then I've seen a lot of companies that had a long way to go and had a challenging road in front of them that had the right leaders. And now we read about them in the Wall Street Journal. And I really believe that the leadership that was included in the deal and the talent that was included in this transaction is as valuable as anything. And when it comes to Ray and his team of structuring these deals on the PPA side, Alex and his group and the ability to negotiate these contracts with the governments, there's nothing like it. And you combine that with what we're already doing domestically in fuel distribution, it's a really exciting story. And I think that this is going to be a stock that people can be proud to own, they can be excited about. And I think it's going to be one of those deals that really surprise a lot of people who on the front end thought, being so closely attached to the oil and gas business maybe would be hard for them to crawl back out. And I think we've done that, and I think people are going to be really excited.
Outstanding. Jason Castenir has been my guest today. He is the CEO of First Colombia Gold Corp under the ticker symbol FCGD. Jason, thank you very much for having yourself and your management team come on the show today. We'll be looking and seeing the growth of your company and be checking back with you in about 2 or 3 months. Thanks for coming on.
Everett, it's a real pleasure. Thank you, sir.